Hey everybody, Sabe here. Giving you a weekend update. Got a little time on my hands. So I'm looking at cycles, different alternate cycles. We all know Camel Finance, very affluent with his cycles. And I was studying cycles just slightly before coming to learn about Camel Finance, and he's really helped me progress with trading the cycles. I think it's invaluable knowledge to have with whatever trading system that you're using to incorporate the cycles. Just it's a game changer, I think. But in studying cycles, just looking at alternative cycles and noticing some things that we could pay attention to. For instance, with the entire history of Bitcoin here, I have cyclic lines that are evenly spaced, and they seem to be in areas of the chart of interest. Let me draw this out. So this is something I call the chaos cycle, I guess, in Bitcoin land, and sometimes it has to do with other traditional finance, sometimes not. Early on in 2012, I don't know if something happened there. It's a little before my time, but studying the history of Bitcoin, I do know this low in 2014 was made by something called the bear whale, and it was just somebody that was relentlessly selling Bitcoin for whatever reason. Then we come to, I think that was July or August of 2017, where you had the block wars, where Bitcoin had a hard fork. And when you had that hard fork, a lot of people did not know how the chain would react, if the new chain would take over, or if the Bitcoin Core chain would continue printing blocks. Essentially, that is what happened, and Bitcoin Cash, that was the fork, ended up just kind of going out of not out of existence, but it's not as relevant as it is today, and Bitcoin Core remains king. The next cycle low, we have the COVID dump, and that incorporated traditional finance along with that, and it was a very large drop in the market, ensuing chaos. And then we have the subsequent low, that is the FTX collapse. So in all of these instances, there's some kind of chaos that happens in the chart. And we are currently coming up to an area where the cycle could, hey, if these timing cycles keep repeating, maybe we're about to have something happen here on Bitcoin, or just announce something on Bitcoin that could send price lower. So something that I'm watching, something that I find very interesting, is the chaos theory that could be coming. I'm not saying short the market. That's not what this is about. It's just watch for potentially something chaotic to happen. Now let's zoom it into the daily chart here. Like Camel Finance will find the daily cycle lows in here, but alternatively, just pulling up a random cyclic lines and spacing them appropriately, we see that each time that these yellow lines hit, it was a good time to buy. Will that repeat into the future? Time will tell. Manage risk appropriately, but the COVID crash, not the FTX collapse low, you had a rally. Then you wait until the next yellow line, you buy, you have a rally. The next yellow line, you buy, you have a rally. And now we're coming up on another yellow line. So mixed with the chaos cycle theory idea, along with what's going on here, this timing is around the 12th of June. That says, hey, blindly buy on the 12th of June and you'll be rewarded thereafter. No, just kidding. Do not blindly buy. Look for some kind of bottoming pattern. Look for an uptrend to start and then buy it. If price is to remain strong, then you don't want to see price go below 90,000. but I'm suspecting that it probably will. Elliott wave theory idea that I've kind of been dealing with is saying that it's going to come down much further, and I'd be ready for that. But as you can see, it looks like good buying opportunities come on these yellow lines. How far apart are those spaced? Let's check. They are 312 days apart. Is that right? Wow, that's almost a full year. Yeah, so you could buy once a year. You have a once a year DCA, and then up only. We'll see if that holds true, but very interesting nonetheless. Um, the downside that I'm expecting with regards to the matching patterns and um, Elliott wave theory potentially um, is kind of matching this lower portion here. Let me take off my cycles and we will draw this out. So currently this move up from November into January matches this leg. So this can be ABC that way, and that leg matches, then this pattern can be complete. I can accept that. I think Tony the Bull Severino is expecting that to be 5 waves up, 1, 2, 3, 4, 5, and complete. It certainly can be, but if it does want to be more bullish, we need other, I guess, avenues. So if this does match, what if this and this match and we're doing ABC, ABC? Then what comes out of there is the larger, more vicious ABC, giving us, cycle peak into October, November, just like the normal 4-year cycle should be, where this ends up being an A, there's your B, and there's a C leg up there, completing this move in its entirety, and then you see some downside. So that's kind of the way I'm seeing this playing out, is potentially just having this come all the way back down right to the lows into that June area, which means it might be pretty fast. Given that chaos cycle idea, maybe we have some kind of catalyst to make that happen. Something to be on guard for. Certainly something to watch. I think everybody is very aware of that support and expecting that support to hold. If the pattern ends up matching this and we have a leg similar to this move down, it won't look like expected, I guess. It won't hold support. It'll look like it'll hold support. So you'd have it come down 3 waves and then chop and then liquidation down really, really quickly. And that's just to grab liquidity. And this ends up being a reaccumulation, the same that this was a reaccumulation. Then you go into markup phase again. And you say, well, okay, that's fine and dandy, but where do we go from here? Well, if we match this particular thing where it's going straight up, we're basically going straight up. You zoom into that prior price action, this broke that high by a little bit. Just took that liquidity a few times and then rejected back down. I kind of see the same thing happening here in our current wave. And that's just matching the current wave, like expecting this to be a repeat of this. ABC up, you know what comes after, ABC, ABC. That's why the 114 is coming into play. It may be very stabby up there and take out liquidity a few times before it comes back down. I think the way to trade that is to expect higher until you get a candle close lower. Currently, price is consolidating in a very symmetrical triangle pattern. This can break either way. I'm not going to say which way it trades, but if it's matching that pattern, it should break up. And if it does break up, I expect it to reverse, come take that liquidity at the very least. But there are plenty of other areas on the chart that have liquidity, such as under here. So if we're in the declining phase of the daily cycle, you can expect price to come down in an ABC and then look like, okay, you have 5 waves up, 3-wave pullback, and that's everybody and their grandma knows previous support at 90K. It's going to hold its support again. Everybody is max long there. The market maker gives you a little bit and then flush. Something to watch out for. Definitely keep your stops tight. Know where to invalidate your idea. Don't keep holding thinking, oh, it's going to turn back around, because it's a long way down into the next liquidation zone or the next stop loss zone or liquidity, and also below here. From an Elliott wave standpoint, I can definitely see this as A. We got a B wave down, and this is some kind of impulse up for a C leg. And what has Bitcoin done for the past 2 years? It searches liquidity. It's just looking for liquidity. It's got these expanded flat, looking for liquidity, getting as much liquidity as possible, back up, expanded flat again. That can be the bottom. I'd be okay with that, but I think they may wick that on a closing basis. I don't think it closes below, but I think they wick it hard and pop back up and then slowly grind like that if price gets down that low. Something to be watchful of into the declining phase. And why lower? Let's turn this on to linear scale, and we can see the kind of, well, the Livermore accumulation cylinder, which would say we're not even in markup phase yet, which is very encouraging. But we can take an Elliott wave projection of this and, make the count to say, hey, we got some kind of 1, 2. This can be 1, 2, 3, 4, 5 into a wave 3 of some sort. This could be wave 4. This can be wave 1 of 5, or your wave 3 may have terminated up here. Wouldn't know how I'd want to count that, but it'd be like a 1, 2, all of that is 3, and now we're working on a wave 4 before going up for wave 5, which would, in essentially, that would be a distribution pattern with an upthrust thereafter. All is valid, but if that was the wave 3, I would take the low of wave 2 and take a Fibonacci retrace of the entire structure there. So let's do that from that low to current all-time high. And what we often see in wave 4 is price will hover around the 382. And sometimes the 382 holds as support, and that is your bottom, but we often see it come down to the 0.5. So I'd be open to a $67,000 Bitcoin just to retest those highs. I'm not saying it has to happen, but if you see price down there sometime early June, I would see that as an opportunity, and not saying that the market is failing. If you do get price down there, all the indicators that people use to call tops and bottoms, they should have reset by the time price makes it down there, so it will be an opportunity. And that would be where I would see the $90,000 or $89,000 level break through, back test, and then flush down again. And for an Elliott wave pattern, let's do the ABCs. Like I was saying earlier, this would be A, some kind of ABC down for B, impulse up for C that can break the high, if ever so slightly, giving you the larger A, B, and then you have a C that would come down really aggressively, sharply, and that is how an expanded flat works. It's grabbing maximum liquidity, taking the upside, and then taking the downside again. You take the downside, take the upside, take the downside, and that's when markets are hunting for maximum liquidity. So if you just see a straight down candle that's just aggressive as hell, stay out of the way of it until it pauses and goes sideways and give you some kind of setup, because this can come all the way down to 67,000 and still be bullish. It can stop at 89,000. I think that's valid. It would be like a 618 extension in C. That's for aggressively bullish markets. You can come down to the 1-to-1, just take all the liquidity, but it should be aggressive and sharp and scare the crap out of you. And then it'll slowly make its way to all-time high again. So then if that is how things play out and we do get a very low wave 4, we can target potential all-time high using Elliott wave to say wave 1 plus 3 projected from the bottom of 4. If it gets as deep as like 67,000, your bull market top should be somewhere in the vicinity of the 618 to the 1-to-1 extension. 125 to 161 would make sense. From in linear scale or log scale would be much higher targets, but one step at a time. We gotta see how this thing goes and if it maintains the trend. Let's flip this onto the log scale just to get targets. Now I would look at this totally differently and measure to the previous all-time high at 74,000 and project whatever low comes from here. If it's 67,000, then you would have this being your ABC in the middle. That's just the way I match it though. You would have some kind of A, B, C, like that. That would probably come a little sooner. We're expecting June. So ABC like that. So I would measure the first part of the leg, and then out of there, potentially getting 300,000 is what I would look for as an aggressive target. The more conservative targets of the cycle would be 125 to 160. I think that's reasonable. And these are my extended targets from 2019. I think I've had that target, so that's where I'd be looking. But we'll take it one step at a time as it's going. We've been getting this thing in real time over on the Slice platform, if you guys are interested. If not, then that's all right. Just chill, wait for the updates as they come. But hopefully we'll have a nice buying opportunity into the cycle low early June. And that may be a great opportunity to hold for the next few months. So know your invalidation and keep them stops tight so you have a good night.